Hi, thank you for having me in today. I'm Lindsay McKnight, representing DWS Deutsche Bank here today. I wanted to talk to you today about an opportunity that we see in the fixed income markets. Today, I know that your firm at Merrill Lynch is also saying that municipal bonds are actually going to provide one of the greatest returns this year as far as fixed income investments go. So today I wanted to take the time to speak about the state of the current municipal bond market, talk about DWS, our team, tenure, and our views on the municipal bond market, and then finish off with some products and solutions that fit well with what our current viewpoint is. So to start, talking about the state of the municipal bond market. I know it's been a pretty wild ride over the last 9 months as far as munis are concerned. In Q4 last year, we had Meredith Whitney on 60 Minutes calling for a day of reckoning in the municipal bond market, calling for hundreds of billions of dollars in defaults. At that same time, we had Treasury rate spike, we had the end of the Build America bond program, and lastly, we had a sell-off of municipal bonds in general. At the same time, the Bush tax cuts were up for expiring or continuing on. So let's dig into the municipal bond market. We've seen the market turn from a rates market to a credit market. Right now we see it as a very, very valuable time to really examine all of your credits as far as munis are concerned. Moving into defaults. Meredith Whitney, like I said, predicted hundreds of billions of dollars in defaults. She's shaping up to be about 99% wrong at this point in time. When you look at defaults, we've had $605 million of defaults, which represents 13 bonds currently. If we keep on the current pace, we're looking at about 40 bonds overall defaulting. And I said million, not billions there. When you speak about the fundamentals of the municipal bond market, we actually see the fundamentals improving. Defaults are trending downward. We're in the lowest year of defaults that we've had in 2 years. And when you look at the municipal side of the market, you see that we're able to balance our budgets and make the necessary cuts to be able to service the debt. From a fundamental standpoint, debt service only accounts for 5% of municipal bonds budgets. So really, it's only a small fractional percentage of what they're using to do that. Let's move right into supply. In the supply market, we've seen in Q4 10, we saw a glutton of supply. Build America bond was expiring, and we saw a lot of bonds coming in at that time. Since then, we've had very little supply this year. We've had about $115 billion of supply year to date, shaping up to be between $240 to $250 billion for the entire year. That's almost exactly half of the issuance that we saw the prior year. How many of you out there today are having a hard time finding supply in the bond market? Absolutely. Also, looking at the yield curve right now in the municipal bond market, we see the yield curve being extremely steep right now. And also, the munis are still being very cheap relative to treasuries. Now let's transition over to the DWS team and our thoughts surrounding the current state of the market. We have one of the most tenured municipal bond teams in the industry, led by Phil Condon, who was nominated for the Morningstar Fixed Income Manager of the Year in 2009. Phil joined our firm in 1983, and his team together averages about 17 years of experience in the municipal bond market and being together as a team for 17 years. The team considers themselves fiduciaries in the municipal bond market. We don't consider ourselves asset gatherers, but looking to keep principal protected and not taking on any additional risk to get yield if you're putting the principal at risk. We consider ourselves value investors, and we have a consistent long-term approach. I would not consider ourselves a yield hog in the space, but more looking for yield, but not at the consequence of principal. Phil's team runs 9 funds, 2 closed-ends, and 7 open-ended funds. We have 4 national funds ranging from short, intermediate, national long, as well as a high yield fund. We also run 3 state specifics for the state of Massachusetts, California, and New York. Where Phil and his team see the sweet spot in the municipal bond market are in single A and triple B credits, ranging from a 10 to 20-year maturity time frame. Today I want to speak to you about 2 funds of ours that fall right in line with where we're seeing that sweet spot in the bond market. We have the DWS Managed Municipal Bond. SMLAX is the H-share ticker. For your PIA and MLPA, SCMBX. We have a duration of 6.39 years and a maturity of 9.1. This averages to be a single A credit quality, falling right in the sweet spot with a 4.33 yield on an A-share currently. One of the things that's interesting about this fund is one of the oldest municipal bond funds in the industry, launched in '76. The Managed Municipal Bond Fund has been in the top 20% for every single 10-year rolling period ever. It's one of only 3 funds to have that state. When you look at this fund currently on a 3, 5, and 10-year number, it ranks in the top 7th, the top 6%, and the top 8% respectively. The other fund that falls right in the sweet spot of where we like with credits and maturity is our DWS Strategic High Yield Tax-Free Fund. This was the fund that got Phil nominated for that Morningstar Fixed Income Manager of the Year in '09. With a duration of 7.33 and a maturity of 13.3, this fund averages triple B credit and has a current distribution yield at 5.06. For those of you that would use the fund with A-shares, no tax is the ticker there. And on MLPA and PIA, our ticker is SHYTX. This fund is it's the only fund in the high yield space to be in the top 15% for every single 10-year rolling period. This fund currently is in the top 8% for a 3-year number, top 4% for a 5-year number, and top 4% again for a 10-year number. So you can see both of these funds, 5-star funds within Morningstar, are really an area that's a flagship area for DWS. Have a couple of implementation guides for you as far as our munis are concerned. The first one would be that we do have a $250,000 NAV breakpoint on every single one of our munis. The A-share here listed below is what you would use for the 250 NAV. I would urge you that if you are using individual bonds, you're having a hard time with supply, consider using some of our funds with our 10-year manager to build a muni bond ladder. Also, if you have bonds coming due, I know June, July, and August are big maturity months or even big coupon payment months for munis. With supply still being light, use the 250 NAV as a way to get your clients the supply that they need, but also the exposure to the municipal bond market. Lastly, I would urge you to look at what you're using in your high yield muni space. There's a lot of really volatile managers out there. DWS's Strategic High Yield Tax-Free has been able to really limit the volatility and give you a much smoother ride through the municipal bond market. Take a look at our performance relative to who you might be using and see if this could be a possible complement or substitute. So today we spoke about the state of the municipal bond market, DWS's management team and their tenure, views on the municipal bond market, and a couple of solutions to help you navigate through the municipal bond market. I'll be around for the next hour and a half walking around. If you'd have additional questions or would like to speak to me, we'll talk then. Thanks for your time.